Okay. So what we're going to do today is we're going to just finish off that worksheet that we started working on last week. So we have gone through and filled in all 3 columns. All we have left to do now on the worksheet is get all the columns to have the same total. That's the last piece of this. So there's 3 columns. There's the trial balance, there's the balance sheet, and then there's the income summary. So everything goes on the trial balance. Only assets, liabilities, and owner's equity go on the balance sheet, and only revenue and expenses go on the income summary. Okay. This one, debits will equal credits. This one, debits will not equal credits. Okay, so these ones, the debits equal the credits. These ones, the debits don't equal the credits. What we're going to learn today is how to make these two be the same number. That's what we've got to figure out. So here's what we developed last week. So again, we've got our assets here. So assets are in the debit column of the trial balance and the debit column of the balance sheet. Liabilities are in the credit column of the trial balance and the credit column of the balance sheet. Your owner's equity, so there's capital, drawings, and income summary. Income summary we haven't messed with yet. That's what's coming next. So capital and drawings, we only have a capital here. Again, credit on the balance sheet, or sorry, and credit on the trial balance. And then revenue and expenses. So revenue is credit on the trial balance and credit on the income summary. Expenses are debit on the balance sheet and debit on the income summary. So, and again, if it's debit here, it stays debit here. If it's credit here, it stays credit there. Okay. So when you are done, these are equal. These ones are not equal. Okay. Okay. So what we have to do today is figure out how to make those equal to each other. That's what we got to learn today. So what you're going to do is you're going to look at your revenue and you're going to look at your expenses. So a net income is also referred to as a profit. A net income occurs when revenue is greater than expenses. A net loss, also just referred to as loss, occurs when the revenue is less than the expenses. So revenue, remember, is money in. Expenses is money out. So when your money in is bigger than your money out, you make money. When your money in is less than your money out, you lose money. Okay, straightforward. So just going through this here, just kind of show you. So this is like the totals at the bottom of the income statement and the totals at the bottom of the balance sheet. So on the income statement, the debit column will always be the expenses. The credit column will always be the revenue. Okay, so here we can see revenue is smaller than expenses. So what we do is we write net loss, and then you figure out what the net loss is. So if this is 5,300 and this is 4,500, the net loss is 800. So what we do is we put 800 into the credit column. So now these are the same number. And just like with all the transactions, if you credit something, you have to debit something. So then we're going to debit the balance sheet. And so now these are the same number. And that's the final piece of this. So if we look at an example here, so again, remember, this is expenses, this is revenue. So here we can see revenue is bigger than expenses. So over here, we would write net income. And if you subtract these two, so if you go 3,600 minus 1,200, that's 2,400. So we would put 2,400 in the debit column. So now these are both 3,600. Double underline. And because it's a transaction, if I am debiting here, then I am going to credit here, because you want to have debits equal credits. And now if we look, this one's 35,000. 32,600 plus 2,400 is also 35,000. So that's the final piece of this. So if we just do one more here, we're not going to do all of these. So again, this is expenses. This is revenue. So my revenue is 4,500. My expenses is 3,200. So I've made more money than I have lost. So I have a net income. So more money in, less money out. So to make these two equal to each other, I've got to add in $1,300. So that will give me 4,500 here and 4,500 here. If I am debiting 1,300 here, then I need to credit 1,300 there. And when you do that, now your numbers are the same. Now notice the income statement number is different than the balance sheet number. That's fine. You just want to make sure that debits equal credits. Okay. So if we do a net loss, just one more here. So here we can see our expenses are 6,200 and our revenue is 6,000. So this would be a net loss. So I'm going to put $200 into the credit column to get this to be 6,200. And because it's a transaction, since I have credited 200 here, I need to debit 200 here. Once I do that, everything ends up being the same number. Okay. So if we bring all of this together, here's what the questions are going to look like. So it's a 5-step process. So we're going to determine what type each account is. We're going to give each account a number. So assets are 1,000, liabilities are 2,000, owner's equity are 3,000, revenues are 4,000, expenses are 5,000. We're going to transfer all of our balances onto the balance sheet, or sorry, onto the trial balance. Assets, liabilities, and owner's equity get put onto the balance sheet. Revenue and expenses get put onto the income summary. This is the new piece. We're going to determine if it's a net income or a net loss. And then we're going to make sure that debits equal credits for all of our columns once we're done. Okay. So if we look at the example here, so here's the summary of a business. Let's say it's taken at the quarter's end. So cash is an asset. So I'm going to give it the account number 1005 or 1,000. Actually, no, it's usually 1,001. A bank loan is a liability. So I'm going to give it a 2001. Accounts receivable. So AR is accounts receivable. So these are people that owe you money. So that is an asset. So I'm going to number it 1005. Capital account. So this is owner's equity. That gets numbered with a 3,000. Accounts receivable again. Again, this is people that owe you money. So this would be an asset. So I'm going to go 1,010. So advertising expense. So this is an expense account. So I'm going to number it 5,001. Accounts receivable. Again, somebody else that owes you money. So that's an asset. So I'm going to number it 1,015. Mortgage payable. So this is something I have to pay. So that's a liability. So I'm at 2005 because I have a liability up here at 2001. Sales. So this is going to be a revenue account. So 4001. Warehouse. So your warehouse is an asset, right? It's something that you could later sell to get money for. So this is an asset. So assets, I'm up to 1020. Drawings account, that's owner's equity. So that is going to be 3,005. Truck is an asset because again, it's something that you could sell later on. So I'm up to 1,025. Truck expense and office equipment. So truck expense is going to be 5,005. And office equipment is an asset. So I'm up to 1,030. Okay? So what we would then do is we would organize all the assets together, all the liabilities, owner's equity, revenue, expenses. So I've put the full answer on the next page, but just to talk you through how I did it. So again, all the assets are together. So these are the assets. Here is your liabilities. Here is your owner's equity. Oops. Here is your revenue. And here is your expenses. Okay. Here's their account numbers down here. And again, what you have to remember, so assets all have a debit balance. Liabilities have a credit balance. Now, owner's equity is a little tricky. Capital has a credit balance. Drawings have a debit balance. So even though they're both owner's equity, capital and drawings work against each other. Capital is the money that the owner puts into the company. Drawings is the money that the owner takes out of the company. Revenue have a credit balance. Expenses have a debit balance. So once you organized all the numbers from the other page, this is what you should end up with. Again, you'll know if you've done it right if you get out the same number. If you don't get out the same number, you know you're hooped. So then the next thing to do is do the other two columns. So assets, liabilities, and there's owner's equity all go onto the balance sheet. Revenue and expenses all go on the income statement. So income statement is just the revenue and the expenses. Balance sheet is assets, liabilities, and owner's equity. Now notice when you do that, whoops, notice these balances are not the same. Okay, so that's what we were working on last week. So now what we have to do is this part right here. So to figure out if it's a net income or a net loss, look at your revenue and look at your expenses. So the revenue is 2,000, the expenses are 150. So revenue is bigger than expenses, so that is net income. So to make these two columns equal to each other, we're going to debit 1,850. And because it's a transaction, so now I've got 2,000 equaling 2,000. If I've debited 1,850 here, then I have to credit 1,850 there because every transaction has to have a debit and a credit. So now if I add up these two, this number and this number will now be the same. So everything now has the same. Now, if it was a net loss, you would have the 1,850 in this column, and then the 1,850 would go in that column. You're essentially just trying to put the number in so that your columns add up to the same number. Okay? So all we're doing today, this is the only thing that's new, is that and that. Everything else we did last week. So it's just 2 extra lines at the end. So on Google Classroom, you're going to do the same thing. I've given you a general outline for your business. You have to put account numbers to it, organize it into assets, liabilities, owner's equity, revenue, and expenses. You're going to do your 3 columns, and then at the end, figure out if it's net income or net loss so that you get your debits equal your credits. And that's it. We're going to give you today and tomorrow to do this. All right? Okay, you're welcome to go down to the lab and start in on this. If you're a little bit behind, work on those back assignments first, and then switch gears to this.